I have an idea that, if implemented, I think would make healthcare in the US much better and more affordable. It keeps private insurers and adds a public option, a public health corporation or PHC. But that's not the most important part of the plan. Here's the idea in brief. Create a government-backed corporation that competes directly with high-deductible private plans. These government high-deductible plans and qualifying private high-deductible plans would be paired with money deposited in a health savings account. In addition, there would be income-targeted additional HSA contributions, or top-ups, to make sure low-income people can actually pay for care. Tie all of that to strong rules like quoted cash prices for medical services, and you get competition that actually works for consumers. And before I forget, if you want full details on the plan, check out the link to the policy white paper in the description. Yes, AI did help me draft it. Okay, so now the what and the why. First, why a public plan option? The market problem is simple. Insurers have an incentive to design plans that attract healthy customers and avoid sick ones. That pushes premiums up for people who need care most. A public plan that's run responsibly creates a baseline competitor. Private insurers can't just raise prices and relax. They get challenged on price, on provider networks, and on customer service. Competition like that tends to hold premiums down because insurers have to earn customers, not just pick them. Key to this, though, the public option would not be allowed to operate while losing money, at least not after a short adjustment period. Second, the HSA architecture. Each plan archetype, think lower, medium, and higher high-deductible plans, come with a plan-level HSA deposit from the insurer. On top of that, the government makes direct income-targeted HSA contributions, aka top-ups. These are cash deposits into the enrollee's HSA, not insurer subsidies or complicated tax credits. Why high-deductible plans? One of the biggest causes of healthcare cost increase is excessive demand by people with insurance who have no incentives to avoid unnecessary care or to shop for the best price. With a high-deductible plan, people care more about what they are getting for their money. Why couple it with an HSA that automatically receives funds? This will provide some level of help in covering the medical costs before the deductible. Because there will be different levels of these plans, such that those with higher deductibles will get more deposited in the HSA, it allows consumers to choose a plan that would work best for them or their family. It would also encourage people to add more to their HSA and get the associated tax benefits. Also, money in the HSA does not expire, and it can be used in retirement like an IRA, or it can be used to cover what Medicare doesn't. However, I should note that since this HSA money comes out of premiums, and premiums are paid with after-tax income, there would need to be something like a refundable tax credit to compensate people. Next, why income-based HSA contributions rather than premium subsidies? This is simpler than providing subsidies to insurers. It doesn't provide the same incentives for raising premiums that subsidies cause. It provides enrollees with the additional tax and retirement benefits of an HSA, and it would mitigate the possible issue that people on high-deductible plans might choose not to pay for necessary care. The idea is to remove the most common barrier, not being able to pay for care at the moment you need it. Third, because premium prices are still a burden, especially before this new system has a chance to work its magic on the markets, there's an important twist on the plan. The plan allows up to 50% of the annual income-based HSA top-up from the government to be used for premiums, but only if the enrollee's HSA already contains at least the plan's yearly deductible, and any use of top-up funds on premiums cannot reduce the HSA below that deductible. This ensures funds are available to cover needed care. Fourth, real people face choice overload. So the government PHC includes simple, plain language comparisons, one-page cost examples, and a default plan recommendation based on a short questionnaire about things like age, household size, income band, and chronic conditions. Fifth, transparency and consumer protection. Providers must post standardized cash prices for services and give binding written quotes for scheduled visits. If something beyond the quote is needed, then unless it is an emergency, the provider must get express consent for the increased price, either written or recorded audio, before charging more. This part of the plan is critical to reducing costs through competition by letting people simply check online or shop around for the best price for services. Last, solvency and selection. The PHC would start with higher capital and reserve requirements so that it wouldn't need taxpayer bailouts. It faces tight premium setting oversight so that it can be self-sustaining. And critically, mandatory centralized risk adjustment moves money between the PHC and private qualifying high-deductible plans so that insurers with sicker enrollees receive compensating transfers, so that private insurers aren't incentivized to game the system and leave the PHC as the insurer of last resort. There you have it, a plan that lowers healthcare costs for everyone by forcing competition among providers and insurers and by cutting demand for unnecessary tests and procedures. It gives people real incentives to choose more affordable care while still protecting them from major health expenses, and it would likely cost the government less than our current system. And just to be clear, this wouldn't replace Medicare or Medicaid, and private lower deductible plans would still be available. Let me know your thoughts, suggestions, and criticisms in the comments below. Thanks. I'm Bridge Builder M.